How you define investment DAOs?
An investment DAO is a network.
How a traditional venture capital firm can start an investment DAO?
It's a beautiful thing, actually, for venture capitalists to do it. You can actually use that to pull your network together. Everyone gets paid.
Where do you think investment DAOs are going?
This is the year of the DAO.
Hi everyone, I'm Yuri from SuperDAO. This is DAO Heroes, a YouTube channel for people who are curious about Web3 and how crypto is changing every industry. We talk about the positive, optimistic use cases for crypto, and today we're talking about investment DAOs with Vic Singh from Eniac, one of the top venture firms in New York and the United States in general. They're very active in crypto. They experiment with investment DAOs, so we hope to learn a lot. If you're new to DAO Heroes, we do a lot of episodes like this. Please like and subscribe, and don't miss the future episodes. Welcome, Vic.
Hey, Yuri. Thanks for having me.
Awesome. So let's start with a quick background on Eniac. You've been around for a long time. You've started in traditional kind of Web2 investing, but you've become very active in crypto side. So let's get a quick background. What's going on?
Sure, yeah. We're kind of, I'd say, one of the OGs of seed investing. So Eniac Ventures, we're an institutional seed venture capital firm. We're investing out of our latest fund. It's our fifth fund. It's a $125 million vehicle. That fund itself is about a year old, so we have a lot of dry powder left. But the firm itself goes back to 2010. And we started with a very tiny fund, $1.5 million. So we founded 10 venture-backed startups collectively across the four of us. We failed, we've succeeded, and we used that DNA as founders to help accelerate our companies.
What was the moment when you realized, crypto is one of the key kind of new industries to arrive, and you start kind of building your own practice, developing your own kind of point of view?
Me and my partners actually started investing personally in the category in 2016. Obviously, we bought Bitcoin, we bought Ethereum, but we also did a bunch of ICOs back in the day. We did Tezos, we did Filecoin personally. We also personally became LPs in a number of crypto hedge funds and venture funds. And it really was a great fit for us because it's very technical. We're all engineers by training, but we didn't actually invest in the category as a firm until last year when we really started to take it seriously, and we put together an on-ramp strategy that allowed us to start with smaller checks, deviate a little bit from high concentration, high ownership, and then ramp up into core checks. So we're now in 20 plus investments across Web3, and we're now in sort of the core investment category where we want to just going after really big market opportunities.
So the crypto itself is now a pretty huge market. There is all kinds of things. There is DeFi, more like protocols and finance and fintech. There are more like Web3 re-envisioning the traditional industry. There is B2B sector, crypto tools for businesses like SuperDAO. And do you see any kind of sweet spot or subcategories of crypto where you think Eniac has most expertise or belief or kind of interest?
So we started by painting with a very broad brush. So we have companies in DeFi, we have new wallets, we have social, we have GameFi, we have DAO tooling, we have NFT and NFT infrastructure, and then we have broad just infrastructure. I think our sort of our bent, being that we're technical, is infrastructure, scalability. So we're really heavily focused on the infrastructure stack, and then up that infrastructure stack is the tooling stack. And SuperDAO is an example of that.
Okay, so now let's dive into our main topic today, investment DAOs. So the very first DAO, the DAO, was actually pitched as an investment DAO. The idea was to pull money together, cryptocurrencies together, invest together, make decisions together. Unfortunately, it was hacked and kind of didn't fulfill its mission. But starting from day one, investment DAOs was one of the most popular categories of DAOs. Then DeFi took kind of most attention for a few years. And protocol DAOs, and then we are back to a time when investment DAOs is one of the most popular category, including super DAO ecosystem. Why is that? So let's maybe first start how would you define an investment DAO?
I think it'll be interesting to just look back at DAOs in general, and I know the history of the DAO, which is like an incredible sort of journey, and then what happened there. But actually, I think the first DAO itself was Bitcoin. I know that sounds controversial, but it was the first sort of decentralized autonomous organization where people could contribute and they get paid for their contribution collectively. Investment DAOs themselves go way back to the 1800s where you had investment clubs, right? Where you would have people coming together, making consensus-based decisions on where they're going to invest. And I think what DAOs are doing broadly and what investment DAOs are doing more specifically is democratizing the whole idea of investing together. I think you're seeing a lot of activity in investment DAOs, but I believe that we're in a very early phase that will transition from people coming together, kind of like the investment clubs that I mentioned in the 1800s, to actually institutional investment DAOs. And I don't think we've fully crossed that chasm. We've explored that at Eniac as well. That's kind of where we're at. We're at a kink in the curve right now in terms of investment DAO formation and activity.
So an investment DAO is a group of people who get together, put money together, and then put their effort together, finding deals, figuring out whom to invest in, and kind of growing the portfolio by helping them either with advice or promotion or things like that. And as a DAO, decentralized autonomous organization, it can either be more focused on the capital side. So let's pull in money from huge number of people. So you can decentralize and scale either the capital side, or you can decentralize and scale the community side, which is, finding deals, selecting deals. And you can have like a different levels of decentralization. On that kind of spectrum, do you think that the near future is more about scaling up the capital side or scaling up the contributor side? And secondly, do you believe that the near term at least, whether the investment DAOs will have the hard community power or it would be a soft community power with some oversight?
I think a couple salient points that you made there worth kind of digging in on. One is, at its heart, an investment DAO is a network. And the question is, what is the value of that network and network participants as part of the investment process? What is the level of engagement? So I think that, a number of people coming together to form an investment DAO, and this is happening with SuperDAO, it's happening with Syndicate. Seed Club is doing a good job at this. It's another example of an investment DAO where people come together, they contribute capital. That capital could be fiat, but it's generally in crypto. That goes into a treasury, and then everyone votes. You propose deals, people vote on it, and then the majority kind of gets the deal done, and then you all have a pro rata ownership of that investment. That's great. So we all know that there are network DAOs that are literally just for communities. So investment DAOs combine financial activity with networks, and I don't think we should look at the network part and de-emphasize that. I actually think it's really, really important to have that level of engagement on the network side. So what you guys are doing and what others are doing is kind of like trying to answer one of the bigger questions is, how do you engage and incentivize that network to participate actively, to contribute, to do due diligence, to scout new deals, to make decisions so that you could actually get really good deals done and really good investments done? You're going to have the 95% who don't do anything, the 4% who do a lot, and 1% who do everything. You don't want that in an investment DAO because capital is at risk, right? And capital is being contributed. You need to find an incentive structure to drive that contribution and that engagement level.
Yeah, I actually it is actually not that common of a position. So I think most of the investment DAO projects that we see discussed publicly are primarily about, hey, let's democratize how we put money together. Reality right now is like there are a lot of investment capital, including institutional capital. So you can start investment DAO with a single investor or the single pool of money coming from a single source or maybe from 10 limited partners. The interesting part that you believe and I believe is the contributor network. So there can be a small number of like high capital providers and a large number of contributors who either don't put capital at all or put a tiny amount of capital. Most of their contribution is not in the form of capital, but in the form of scouting, supporting, selection. And as you said, it's not just a question how you bring this contributor network together, is how you incentivize them. One thing that we've seen is in the traditional venture capital industry, there are funds, vintages, like you splice. So in investment DAOs, the word is used seasons instead of funds. So they kind of cut in season, like this is season one, this is contributors. You contribute to like scout and select and whatnot, and then we distribute kind of the rewards based on season one, season two, and season can be a month, can be 3 months, can be so much shorter than the traditional kind of fund vintages. That allows you to experiment. So you can experiment with one contributor reward system on season one, then make some adjustments for season two, then make some adjustments season three. So the underlying capital might be a longer term fund, but the the contributor rewards are kind of designed or redesigned or improved kind of in a much like higher frequency time.
A good investment DAO, you don't need everyone to contribute just capital. You may have like most of the capital from 10% of the folks, but you want everyone else to be engaged. And you actually have a lot of members, or hopefully I would want actually for an ideal investment DAO to actually have a lot of the members who don't contribute capital, because it is a bar to actually put money in, right? But to know that they're part of this community, this network that can drive really good deal flow and they could actually add value. And then the question is, how do you incentivize them? The DAO itself could have a token. Does that token get listed? Does everyone get a piece of that pie? The investments themselves will have a profit. Everyone share in the profit of that pie based on how much they contributed, whether or not they put capital at work, right? So these are questions that have to be answered, and I think people are coming up with creative ways to answer these questions.
The next topic we can't avoid is security law. So the spirit of security law in the United States is that if something is highly risky investment, it should be available only to accredited investors who have so much wealth that they can kind of afford to lose it. What's your point of view? Should investment DAOs allow and accept money from retail, non-accredited, like middle-class investors?
I think there's a broader question here, which is the democratization of access to investing in startups. And I think a lot of the masses are seeing, before the market tanked at least, a lot of the masses were seeing, wait, these tech companies are skyrocketing. These private investors made so much money. I wish I could have been a part of that. And way back when AngelList started, they tried to democratize it as well, but only for accredited investors. And I think there's an appetite from your everyday person to invest in startups first, and then we could talk about DAOs specifically in startup and get that value out of it. What I think people need to get educated on is the risk profile. Like if I'm a normal person and I invest in a restaurant, that restaurant will likely fail. And I need to understand that that is the risk I'm taking. So I think if we can educate the masses around the risk profile, then I believe that we should democratize investing in startups. The corollary to that is democratize investing into investment DAOs themselves.
Kind of more broad access, but with some sort of breaks and education requirement. Got it.
Well, I think the cool thing, if you go to like investment DAOs, and let's say we democratize that, right? Like let's say like legally anyone can join an investment DAO. The cool thing goes back to what we talked about, which is you still have the network and the community. You will get a lot of information, actually. If that network is engaged, they're going to give you a lot of information about this deal, this space, how good are the founders, how bad is the market, right? And that's actually a way to actually bridge that gap of understanding the risk profile of something while participating. So going back to our earlier example, you could have an investment DAO where normals, like the masses, can be a member of the community, and maybe at the beginning they're just watching, but they're not putting capital to work. And then they're seeing all the action, then they're getting educated, and then now they're able to put capital to work.
Effectively, the safest, both from kind of security law perspective and also kind of from the benefit of the retail investor and participant, way to start an investment DAO is a clean cut. There are two separate roles: a capital provider, who are accredited institutional or high net worth individual, people who know what they do, can afford to lose money. They put the capital for maybe season one, and then there are contributors who in season one start as pure contributors, so they don't put money at risk. They put their time and effort, so they learn to be a contributor as a network, as a community, to scout, evaluate, support the deals. Season one is done, and then maybe the best contributors who might not be accredited will have a chance in season two, maybe put some money at risk, or at least have a rewards more proportional, not just to their effort, but to some kind of get a high slice of the upside through kind of more active participation.
Exactly. Think about it as like a graduation paths based on learnings, based on contribution. You continue to graduate to actually become an investment person yourself.
Yeah, I'm actually on that track myself. So you can call it investment DAO, Alliance DAO, which is an accelerator for Web3 projects.
Yeah.
Amazing
you came
people.
out of that, actually, right?
Yeah, we graduated. Yeah, they invested. We graduated. But now I'm a contributor there in a way that I refer new projects to their future cohorts, classes, and actually some of them got accepted. And so I get kind of some sort of contribution points because I referred some of the deals that now in the next class. And so they track who of their past alums kind of recommended new deals there.
That's awesome. That's awesome. And the key for that, and they probably have it figured out, is how do we translate those points that you're earning into value, right? And that value could be you graduating to now put your capital to work, or that value could be a monetary value that that incentive is tied to. And that second part of it goes back to one question, one big open question for investment DAOs right now is how do true institutionals, how do venture capital firms do investment DAOs? That is a very lingering legalese type of situation, as opposed to a bunch of folks coming together, pooling a treasury and voting and doing all the network stuff. I think it's very different. And that incentive structure will be one of the things that has to be figured out for folks like Eniac and other true venture capital institutions to start our own investment DAOs.
How a traditional venture capital firm can start an investment DAO or participate in one. There are some venture firms who are good at capital, so they either have their own capital or they have a few LPs with whom they can experiment. The other approach is someone has a community but doesn't have LP. So they say, we have a community, we can scout, we have expertise, we can support the deals, but we need more capital to play with because we're not wealthy enough to generate meaningful returns on our own capital. So we need an LP base. And so I've seen communities who are seeking LPs and LPs seeking communities to partner together. But Eniac, my understanding is you guys have both. You actually, over the last 10 years, built a strong community of your past investments and alum founders, and you have the strong LP relationships and maybe your own capital to play with. So you can actually incubate the whole thing inside you. Please tell me where you are in your journey to experiment with investment DAOs.
Yeah, no, that's great, and that's great context. And what we're hearing or what we're talking about here, the thread of this whole conversation is how do you mix the community with the investments, right? That's the thread. And I think we both believe that's the right approach. And I actually think this isn't just exclusive to Eniac. If you're a venture capital firm, past your second fund, maybe even through your first, but at least past your second fund, you already have a network of founders, a network of those founders' employees. You have your LP network. You have your own team, past investments, future investments, you already have one. You may not have done a lot of work to pull it together. And that's the beauty of a DAO. You can actually use that to pull your network together. All that network, your portfolio companies, your experts, like Eniac, we have a whole expert network. They can join, this DAO. And instead of saying, hey, can you get on the call with Yuri and talk about how to scale your back end or whatever, we could put him in the DAO and they could get incentivized for being part of that, for helping our companies, right? So it's a beautiful thing, actually, for venture capitalists to do it. The question is, how do you translate that into the investment part of it? And that's where there's a lot of different structures that are happening, right? There's folks that will say, okay, we have the network. Now we have a traditional LP-GP structure that will now be pledged into this network, and everyone gets the upside in the form of carry or whatever else. That is a very open legal question right now, and it requires a lot of meandering to get that right. So I think when you hear big venture capital firms announce their investment DAOs, they're actually not actual DAOs. There's nothing really on chain. They're basically just community chats in Discord or Telegram or whatever, because there is that open sort of lingering question around how do you translate this into actually a financial transaction with this network. And I think we're going to solve that. And I think it's going to take an industry push to solve that. And I think a lot of venture firms will probably, including Eniac, start with the network DAO and then evolve into potentially an investment DAO as a potential other vehicle in addition to our core vehicles. That's an open question. And the other way to think about how do we get exposure is by ourselves investing in an existing investing DAO to learn about it, to learn the mechanisms of what makes it work well. And we're actually in the process of doing one of those right now. I think there's a lot to be figured out, and we have to tread very carefully. But it's super exciting because, like I said, you combine your network, and then you use that network to deploy capital, and everyone gets paid in one way or another.
Another approach we've seen is that when carry points, sometimes it's too hard to implement. It takes too much time because the
Right.
investment DAOs take too much time, like a lot of time to pay back. So what we've seen is that if there is a partnership between like more traditional kind of venture firm structure and the community or network, the venture firm would deposit a fixed amount of money, like a season one fund, into the treasury of the community and say, hey, you all contribute, like scout, support, select deals, and at the end of the season we'll look your contribution points or however like the system is, and we just split the this fixed amount of money. And maybe if there are more upside in the future, then we'll split the future upside as well. But at least the members know that the minimum risk is like there is a guaranteed minimum amount of money that is at play. It's already in the treasury, so it's very clear transparency. So it's essentially like upfront scouting fees or upfront kind of community compensation that is already available at the start. And there was like very legal structure because it's like a variable contractor relationship where like everyone like support the investment, and then they
Right.
get paid as a percentage of the pool as opposed to like hourly.
Right. Like what you're talking about is like, hey, let's take a piece of our management fee or something.
Yeah, yes, exactly.
Let's put this economic incentive into our network,
Yep.
and they'll know that there's going to be rewards at the end. Maybe over time there's profits that could be shared. That could be an interesting. I like that approach. That could be really interesting and could, solve a lot of the issues that I was talking about. They may actually just take it out of the fund, and then in essence, that actually becomes an investment from the fund's perspective, where this DAO is actually a portfolio company. So, and that
Yep.
way it's circular because you're kind of creating an investment into a DAO that is a portfolio company that you bootstrap. So it's almost like you incubated your own company and is investing it. So that's the other potential kind of clean model that could work.
There is a very clean and straightforward way how most like investors can start with investment DAOs, which is if you have money, if you are accredited investor or professional venture capitalist, you can use your current LP structure or your current LP base to start experimenting, build your own investment DAO by either activating your existing community or partnering with some other community or network, inviting the network or community participants primarily as contributors. So less about capital, more about scouting, support, and selection. Either give them a percentage of management fees or as like a fixed amount of like contributor reward fund early on, and then over time figure out more like variable compensation and profit-based compensation for contributors. And also over time, as contributors become more sophisticated and practiced, allow contributors to also put money at risk and not just their effort and time. That sounds still too hard. The investors should just join investment DAO as an LP or as like a capital member, rather than every investor build their own DAO. Like we don't need every investor to build their own investment DAO. So if anyone needs to discuss it further, I'm always love to discuss this stuff. I'm just my last name at Telegram, Lifshitz, or like reach out to me everywhere, or just apply to SuperDAO and our team will get back to you. Vic, any last words? Where do you think investment DAOs are going? What are you most excited about for the next maybe 6 to 12 months in the intersection of crypto and investing?
We had the DeFi summer of 2020 that led to the NFT of last year, and both of those are stacking where we're at now. And this is the year of the DAO, and this is irrespective of the markets. I believe that DAO formation and engagement will continue to rise in a power law way because we have the embedded infrastructure and companies like yours to actually support that formation and engagement. So we're very, very excited about that. Continue to be very, very excited about what's happening in Web3 broadly. When you see like real talent, real developers flocking to the ecosystem, and the most talented people in the world are building on top of this infrastructure, and that's definitely like an area that's going to continue to rise and continue its momentum. And when we started investing in Eniac into space, we fully expected a crypto winter, right? Like we talked about it and we said, hey, there will be one coming, and actually that might actually be the best time to invest. So let's get our feet wet now, and we have 20 plus investments. And when things go down, it's when all the tourists will leave and the great talent stays, and that's when the best companies are formed. So we're very bullish.
Awesome, awesome. Yeah, I agree that basically the last 5 to 10 years were laying the ground, building the developer infrastructure, building the fintech infrastructure, and now we at the application and tooling level and the real utility across every sector, from like sports and entertainment, music, film, real estate, hospitality, and so on and so forth. So the good times just starting in terms of like what we can do. And if the macro conditions are not the best, it gives us this quiet time to actually build stuff.
Yeah, and I think DAOs themselves are going to you're just going to see, we don't know what types are going to be formed. Investment DAOs are going to continue to rise, but there's going to be open source DAOs, community DAOs. There's going to be DAOs for every industry that you're talking about. So it's super exciting just in sort of the DAO verse itself right now. So
yeah, let's keep building. Thanks, Vic, for stopping by, and thanks everyone for listening. DAO Heroes channel about the future of Web3. Please subscribe for more trends and explainers and deep dives like this one. Until the next one, bye.
Thank you. Hit me up at Vic Singh on Twitter.
Perfect, absolutely.